Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Sylvia Jablonski, CEO and Chief Investment Officer with Defiance Investments, to discuss the key sectors in the market for investors right now and how to get exposure to them through ETFs. Sylvia, it's great to see you as always. Welcome back to Trade Talks.
Hi, Jill. Great to see you. Thanks for having me.
You got it. And before we get into the sectors that you're taking a look at, I want to get your macro thoughts here. Clearly, we have a big week with key inflation data coming out, but since the beginning of August, it has been a little bit more rocky than the upward trajectory we've seen until then.
Yeah, that's a great point. It's been a stellar start to the year, although that's also coming off of a rough 2022 where we did see, kind of like a rolling recession across various sectors. We saw rates still going up, and this year I think we're in a stage where the thought is that, inflation is coming down. The direction of rate hikes is going to be, kind of downward or at least neutral for a while, on hold at least. And I think that the stock market tends to move, ahead of what's going to happen next in terms of that data. So it's not wholly surprising that August saw a little bit of a pullback. We had a good run in the first half of the year there. August tends to be slow. September tends to be a down month historically. And then, you get that year-end momentum back into the various indices. So we'll have to see what happens. I think that if the Fed stays on course to pause and look at the data and we don't get any kind of, glaring surprise in terms of CPI or PPI data, then I think we'll kind of be good to go in terms of resuming a potential rally.
So it sounds as if you're pricing a soft landing scenario.
I am. A whole lot of people have jobs. Wages are increasing or at least staying stable. There's, trillions of dollars of wealth that was created in the first half of the year through the equity market. Savings remain high. Corporate earnings and the guidance from corporate earnings that we saw was really stellar. So it's just hard to see, what would kind of change that around. That being said, there are certainly a lot of people in power that can change it around, like the Fed, for example. So I do think, though, that it would take, an unexpected event to really throw us off kilter from that soft landing scenario.
So where can investors find the potential trades?
So I think that there's still a lot of places to look. Electric vehicles is one of them. If you look at Tesla the other day, they came out with the news about the supercomputer. They're going to essentially have this AI that allows cars to actually be, self-driving, reactive, fully autonomous. That's a great AI story there. And then if you think about, kind of how they can license that data out to other sectors, super interesting run for Tesla. That, along with their record deliveries, leadership in the space, charging sections. We've got an EV ETF actually that holds Tesla in 4 of their names. And, the names are things like XPeng and Li Auto and NIO and Rivian. And all of these companies have a really great story, whether it's investments from Volkswagen, whether it's, starting up an iPhone service, whether it's record deliveries, whether it's fixing supply chain issues. And EVs right now are sitting at about 14% of global vehicles sold. And that number is meant to get, to 30% in the next 5 to 10 years. So there's certainly a growth path to that. And it's a great opportunity, sort of regardless how far the prices run. I think that we're just in the beginning stages. I think if AI is the future of tech, then, EV is the future of auto.
Right. Of course, I have to ask you about AI. I mean, it's a generational opportunity, of course.
Of course it is. And I think the way we look at AI is we try to think about what else goes into it. So you have artificial intelligence, which is going to change the way we live, work, play. It'll impact the healthcare sector, making data more accessible, quicker to get, quicker to parse. Robotics and surgeries, banks can calculate risk more quickly and efficiently. We sort of know all the use cases, I think, at this stage, but you're going to need supercomputing, you're going to need chips, you're going to need all sorts of, data parsing equipment and things like this. So if you look at quantum computing, supercomputing, and AI, I think that that's a really great place to be positioned into the next, 5 to 10 years. This is certainly going to be the decade of AI.
And let's talk about the travel trade, because if airline ticket prices are any indication, there's clearly a lot of demand out there.
Yeah, so I think absolutely it costs as much to fly, 2 hours away from wherever you live as it does to fly to Europe at this point. But I think that airlines have had pricing power. Spending has gone from goods to services. Again, we talked about that steady jobs number. The consumer is out there; they're looking to spend on experiences, and that a lot of that money has gone to cruises, to hotels, and to airlines. And again, going back to earnings season and guidance, we're sort of worried about the cost of fuel popping up. But if you look at forward-looking bookings and things like this and pricing power, the CEOs of these companies just have a really good story to tell. And I think that's a great short-term trade to be positioned for.
All right, Sylvia, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks, Jill.